I got a request today to do a portfolio review on Denver, Colorado, one of my favorite investment cities, so come check this out. Hi, I'm Greg Rand. I'm the Chief Strategy Officer at Renters Warehouse, and I got a request today to talk about Denver, Colorado. Somebody saw that I talked about it on TV. It was actually 10 years ago that I talked about it on the Fox Business Network as one of my favorite picks around the country of investment markets. It's Denver, Colorado.
Not a surprise. Colorado. There's not much wrong.
Not much wrong. That's a great way to put it, actually.
If you live in Denver.
And it really has paid off for the people that did it back then. It's still paying off. And I want to just give you a little information about what makes Denver such a phenomenal investment. The philosophy of investing in real estate is that you're investing in the where. The house is the what. The house that you invest in, the rental property, that's the instrument through which you take a position in a place. And there are no better places in the country to be investing and acquiring real estate than Denver. I'll tell you why. Number one, and this is something I'll link in here somewhere, the video from 10 years ago. Back then, it was just the fundamentals of Denver, that population was moving in. People were coming into Denver from all over the country. We see migration going into Denver from all over the country. Okay, so they're pulling out of the Northeast, they're pulling out of the Southeast, pulling out of California. The lifestyle was so good. The job growth was so good. The cost of living was so attractive. The quality of life was off the charts. I remember spending time with people out there, learning about it. And I discovered really in Denver that one of the things that I always do when I go to a market now to do research on it is to talk to people that have everyday jobs in the area and ask them why they like it. It was because I was in Denver. It was 11:30 at night. I was heading back to my hotel. I stopped into a gas station Quickie Mart. Person behind the counter was so friendly and like so happy, which you don't find at 11:30 at a Quickie Mart, right? So I asked him, I said, how long have you lived here? I moved here 2 years ago. How do you like it? I love it. I would never go anyplace else, right? He loved it. I work 2 jobs, and then I go on my mountain bike in the summer, and I go on my snowboard in the winter, and I could not be a happier person, right? He was in shape. He said that everybody is in shape. You have to be in shape in Denver to take advantage of the lifestyle. So that clued me in. Flying home the next day, I'm going through the security line. Same thing with the TSA agents. I'm a New Yorker. The TSA agents aren't nice in New York. They're not nice in most places. They have not a great gig, right? These people were like, hello, sir. I'm like, what, me, right? So happy, so nice. I didn't talk to them for long because they don't have a lot of tolerance for that. But I did ask him, you like your job? He said, I love my job. I said, you like your city? He goes, I love my city. Again, with the affirmative, like, I don't just like it, I love it. I would never leave. Those are the kind of fundamentals that when you understand the reason why the people are there, you understand what the drivers are of demand. Understanding how to pick winning real estate markets is all about trying to figure out why people are going there. Are they going to keep going there? Are the magnets that draw them in for real? And then you dive in and start focusing on the data. So I have a sample here from one of our brokers in Denver. We're a real estate investment services company, by the way. So we want to help you plan your investment portfolio, execute on the acquisitions, do all the research, work with one of our advisors on the ground, plan and execute a long-term investment strategy for your chosen market. And by the way, we handle the property management also. So all the things that might be keeping you away from investing in real estate, like for example, if you live in Denver, everything I'm telling you, you understand. The question is, why aren't you buying more Denver, right? And the answer probably is you don't know how, and you need help, and you need somebody to help you manage the property afterwards. So we're building a company that does all those things. So all you've got to do is come up with the money and then take the positions. So here's a sample of Denver, Colorado. This is a 5-property sample. You're going to see they're scattered around the city. This is one of our brokers who did this as a way to demonstrate that here's what you get on the western side of the city, here's what you get on the eastern side of the city. You see it mapped right here, and here's each of the properties, and it gives you an analysis of each of the properties. And so you're seeing, if you don't know what a net yield is, you have to contact us and sit down and have it explained. But a net yield is what you make in profit after you collect your rent, pay all your expenses, and then you get a check. What is that check as compared to how much money you invested? That's your yield. It's your percentage rate of your interest rate, so to speak, on your investment, right? These properties are high 3s, mid 4s, low 5s. So call it a 4 3/4 market. That means you're making 4 3/4 income on your money. Write a check for $100,000, get $4,000 in return. All right. Now compared to a savings account where you're getting 0.5%, that's really good. But compared to maybe a more aggressive mutual fund, you might say that's not quite high enough. But I'm only talking about half the picture right now. If I go over here into our market data section, you can now see the way this market has performed long-term in terms of appreciation, because a single-family home is an appreciating asset. So you get income on yield, plus you get appreciation. You combine those, that is your total ROI. We use a 20-year average to forecast future appreciation. And the reason is, as you can see on this chart, 20 years shows me the late 90s, which were pretty boring. Then it shows me the housing boom, which can be very volatile, and then the housing bust, which can also be pretty volatile and scary, and then how the recovery looks after. And what you're seeing here is the blue line is the US. Okay, and you see the boring 90s, you see the crazy 2000s, then you see a recovery. Then you've got the black line, which is Colorado, and then you've got the green line, which is Denver. And what you see is the green line pretty much tracked the rest of the state, but it didn't have a crazy upswing during the boom times. It was kind of steady as it went up. And then it held during the down times. It held, okay? So while other markets like Las Vegas went way up and way down, Denver just kind of stayed steady. That's a proxy for the fact that even though the market was volatile, the population growth was unwavering. People were still coming no matter what. In fact, when the economy's bad, they go to better quality of life, lower cost of living places. So folks were getting out of LA and San Francisco and New York and going to Colorado. But then look what happened in 2012. The market has taken off, I was on the Fox Business Network in 2012, right before this took off. I was basing all my recommendations on the fundamentals of the market and the population draw of that quality of life. And I was right. If you saw that and you bought Denver, you won. You'd be sending me a thank you card right now. It has taken off. But what you can see is that if you start at the beginning of this curve and you carry out the trend line that's established in the first half of the curve, it ends up kind of like where it belongs. In other words, that crazy upswing is really only catching up to the trend line that the market seems to want to go to anyway. All right, now why is that important? Well, because you don't want to find a market that had a big upswing and then it's going to have a bubble correction that's going to pull the prices down. So why do I believe that is not going to happen? So it's one word: cannabis. The cannabis industry is a beast. It's a monster, okay? Doesn't matter if you agree with it politically. Doesn't matter if you think it's going to be the ruination of the country. From an investment thesis perspective, you have an industry coming in that's going to be a long-lasting monster of a business. So many jobs, so much wealth, so many business opportunities for so many people. And so what you had here is that other governments, governors, state legislatures were arguing and bickering and thinking about it and wringing their hands, and Colorado opened their arms and welcomed that industry in. That industry is setting up shop. It's like, think Houston and oil, okay? Think New York and the financial industry, and now think Denver and Colorado, greater Colorado, in the cannabis industry. It is creating lift in every way, shape, or form. Now, this market was taking off like a shot before this. This is only going to reinforce it. So now, after this chart, I just want to show you population change, nothing but upward trajectory. Migration, all inbound. Unemployment, down, down, down. And then job diversity, which I always find really interesting, because people would think, Denver, Colorado, travel and tourism is a big industry, and maybe that makes you nervous because that could be fickle. Economy goes the wrong way, people don't want to travel as much. Number one job category, trade, transportation, utilities. That's infrastructure. Number two, professional and business services. Number three, education and health services. Number four, government. Number five, leisure and hospitality. So government is a small segment of the market, which is good. Leisure and hospitality, the one that I would have thought was a bigger one that has so much room to grow, is actually the fifth category, and it's all the fundamentals: business, utility, trade, transport. So here's the point. If you're somebody who lives in Denver, Colorado, and you know everything I've just told you is true, I haven't told you anything you didn't know. I may have just highlighted some aspects of it that make you think to yourself, wow, that's actually interesting. If you're making money and you're saving money and you've got wealth and you have a long-term plan, why aren't you thinking about owning more Denver? That's my appeal today, is that don't make your money, build your business, execute on your career, make the money in the place that is the gold standard of real estate quality, and then go send your money to Wall Street. Makes no sense. Buy more Denver. Thanks for watching.